Sunday, January 16th, 11:41 a.m. New York time. Good morning. The end of the week. So we'll look at the weekly candles. Start with the equity indexes. A lot of stuff is occurring recently. So let's see if I can show it on the weekly candles. We'll start off with the S&P 500 cash index. So for the year, we're trending down. Each of these two current candles have made lower highs and lower lows. And the current candle, yeah, it closed green, but it still closed below the prior close. So it's trending down, but it's doing a retracement of the current trend that was up. So it hasn't broken that yet, nor has it broken or closed below it. We have this demand zone, this green area. I'm looking again for potential pullbacks to reload bullish positions and make monthly income through the trading style I apply. Let's look at the indexes inside the S&P 500, as well as some that are not included inside the S&P 500. So we look at the NASDAQ one, same thing. Look, lower lows, lower highs for the past 2 weeks. Doing retracement. Now I already broke below and closed below this demand zone. So if we get a retracement to the upside, use cautious. This big round number, 16,000, has been showing supply or sellers are. And then from that point, if it does retracement up there, it may go lower. Dow Jones Industrial Average, same thing. Both 2 weeks of the new year, lower highs, lower lows, retracement, trending down. Potential demand zone of buyers coming in this area. Russell 2000, which is not part of the S&P 500. Same thing, both current candles, lower highs, lower lows, trending down. And now it's inside this demand zone. This green area is demand zone. It did not close inside. That's good. So maybe we have a potential reversal for bullish trades maybe this week. We'll see what happens. But the bad thing is we close on this weekly candle below that prior week candle close. That's bearish still. Yeah, use caution because that 2200 range, there was a bunch of sellers there. Back to the indexes inside the S&P 500, the Dow transports. Yep, lower highs, lower lows, trending down. And it rejected going inside nor closing in this demand zone. That's good. It's showing more strength. A lot of buyers have been here in the past. And the Dow utilities, lower highs, lower lows, trending down. So now you got a perspective of what's happening here. Of all these, equity indexes are not at the all-time highs for this month. They did make highs the prior week, but they're trending down. Yeah, so if you're bullish, I don't see any setup or trigger yet to be buying on this time frame, the weekly time frame. Let's go to the S&P 500 sectors. There is 11 sectors in the S&P 500, and I have them in the order. The largest percentage representing an S&P 500 is the XLK. So the XLK is technology. It makes up 20.8% of the S&P 500. Very similar to the NASDAQ index because it's technology. Same thing, current candles, both higher lows, lower lows, trending down. This is the key area, $160.47. If it breaks below there and closes below there, that's even more bearish. XLV is healthcare, makes up 14.9% of the S&P 500. Again, same thing, trending down, lower highs, lower lows. Closed below the prior week, that's even more bearish. So you notice what's occurring here. Most of these indexes I'm showing you, they're trending down. Yeah, they have a not the word. There's correlation. They're all. Let's keep looking at these sectors. See, there's leadership. XLF, the financials, they make up 13.7% in the S&P 500. Look at that. This index for the year and the current week for the month, all-time new high. Higher highs, higher lows. That's showing leadership. but it closed red back inside that prior week. That's not good, even though we made higher highs. So the trend has been up, better than all the other ones I've been showing you. So this is better leadership than all the other indexes we've seen so far for year to date. Year to date means 2 current weeks. So if you're bullish, one might consider looking for this for pullback or the stocks within inside of it, potential setups and then entries. It's XLF financials. XLY, consumer discretionary. It makes up 10.2% in the S&P 500. Same thing, trending down, lower highs, lower lows, rejected going inside and has not gone into close yet in this demand zone. That's good. Buyer steps in so far. XLC, that's communication services, makes up 9.9% of the S&P 500. Lower lows, lower highs, tested this demand zone. Rejected closing inside it. That's good. That's a bullish sign. Still want to see a trigger. XLI, industrials, makes up 9.70% of the S&P 500. Lower highs, lower lows, closed red for the week. Also closed below the prior close. Here, it's building consolidation as well too. So it's not as weak as some of the other ones, because when you start seeing some of these candles closing below the prior range of that prior week, that's even more bearish. You understand what I'm saying there? If you don't, comment below. XLP, consumer staples, makes up 6.7% of the S&P 500. Made a lower high, lower low, red, but it closed inside that prior week. So that's appearing more bullish than many of the other ones. The financials were better, but this again closed inside that range. That's better than some other ones. XLE, energy, 6% of the S&P 500 makes up. Outstanding. Right off the bat, look at this. 2 current candles, weekly candles for the year, both green, higher highs, higher lows. Outstanding. That's the best leadership right now I'm seeing. We're inside this demand zone where this gray area is, and we closed inside it. That's good. Let's go look longer duration. Let's take it back to 3 years. There we go. So this was in the past a supply zone where sellers were, and then rejected, went lower, lower. Now we're back inside that. So we're looking for it to close above 65. That would be more bullish. So there's already aggressive buyers already in here. So if you're looking to enter into this, I would take it to a faster time frame and look for triggers on return, on setups. Again, if you don't know what that means, you're welcome to join my Patreon page. The link's below. XLU, utilities, makes up 2.8% of the S&P 500. Both red, lower highs, lower lows. Trend is down. Overall, it's an acceleration. XLRE, yeah, real estate, 2.7% of the S&P 500. Lower highs, lower lows. Both weeks are red. Smaller trading range this current week. It's also tested this demand zone of buyers and closed above it. That's good. Yep, so maybe we'll get a retracement. XLB, materials, makes up 2.5% of the S&P 500. Lower highs, lower lows. Trend is down. And overall, I already point out, we saw one of them that was the best, and a few of them that were better than many others. So take note, if you're in single stocks or index stocks or mutual funds, are yours performing equal or better than the equity indexes? If they're performing worse, I highly recommend you rotate out of those and get in leadership positions, because there's singles already showing here that much more downside may be occurring. Why would you want to be in a fixed investment, regardless what kind of stocks it is, that's going down and maybe going lower, going ahead of time, and buy more positions of stock prices declining is not the way for winning. The best buying more positions, something that's trending in your direction. Yeah, you're paying more for it, but as it continues going higher, your value is going up more for your portfolio. Versus if you keep buying on dips and it keeps declining, your overall return on investment is declining. You got it? Whoever sold that to you buying on dips of weakness that are declining lower, there's different ways of buying on dips. Understand? So XLE, this is already proving leadership. So if you're buying on dips on this, that's better than buying on dips on stuff trending down. Let's go look at the Faang stocks. What are the Faang stocks? They're the biggest, most popular stocks trading that most institutions are invested in or exiting positions. So Apple, 2 current weeks of the year, lower highs, lower lows, closed green, and it closed inside the prior range. That's good. It could be worse. Overall, look at that, still in acceleration. Microsoft, yep, lower highs, lower lows, trending down inside the supply zone right here and closed slightly above it. That's good. Overall, it's been bearish, been trading bearish, making money on the downside. Yeah, mentioned this last year too, not to be buying this. Big institutions are unloading their positions. It's not leadership. Amazon, lower lows, lower highs. It closed above this demand zone. That's good. That's good. So maybe we'll have a reversal on this. Facebook, also lower lows, lower highs. It closed green and it just shy of looking like it closed inside that prior one. But we have some buyers stepping in there. But again, it might have more downside. And Google, oof, lower highs, lower lows, trending down. It did close back inside this prior week, so maybe we'll have a retracement. But most of these so far, I'm showing you these Faang plus stocks are a failure. They're not making higher highs. That's not good leadership. Tesla, yep, both weeks, lower highs, lower lows, trending down. November Victor Delta Alpha, I'm not sure how I pronounce it in the video. Lower highs, lower low, trending down. Netflix, very disappointing. Yeah, huge sell-off since the start of the year. Lower highs, lower lows, trending down. Not looking good. Yep, it's coming in earnings soon. And Bravo Alpha, Alibaba. So look at that. For the week, past 2 weeks, higher highs, higher lows, closed red for the week. Closed above the prior week's close. That's good. So this kind of candle here could be interpreted as 2 things because it's dodgy. It almost opens and closed the same price. It's on a trend that's up. So some people interpret it as halfway in a trend. Halfway would mean it they expect it to continue up. Got it? And then some people look at it as a potential reversal because it occurred on top of a trend. So they're looking to trade bearish. So you have mixed views of what's supposed to happen. So that candle by itself is not going to show as a trigger. That's showing as a setup. So one would look, if it breaks below the low of here, you may have more bearish shorts occurring in it. If it breaks above the next candle, breaks above that, closes above that, you may have more buyers. So I labeled this, and we're looking at Fibonacci from the high here to the low there. And we look at retracements. So currently, because it's coming off the bottom, it's testing this 0.382. It tested it, closed below it. Okay, that bearish, but it's still trending higher highs, higher lows. So now we're going to look for see if it runs up to the blue 0.618. That's a Fibonacci. 50% is not a Fibonacci. I haven't shown because I want to know where a halfway point is. But the Fibonacci's I look at 0.382 and 0.618. So again, the trend is still up. We'll watch what happens. But notice what happened here. The end of last year, huge sell-off, 2 inside candles, 2 green candles. So we were having a massive consolidation. And as we had this big red candle, we went down and early, we tested on this green one, but we did not take it out. And notice these small little bodies. Yeah, this was occurring on the bottom of consolidation. Now we may have new investors coming in to buy this. And then this big green candle, impulse move up and closed above all these little candles. So we may be, again, I'll say again, new buyers coming in here because it's sold off so much. Let's look at a longer duration. All right, there we go. Since all last year was massive decline, let's go back even longer. Let's take this back to 5 years. Yep. So a huge sell-off all the way near this midpoint of that year. Let's zoom in. So now this company is not going out of business anytime soon. Neither is Amazon. They're very diversified. And maybe they're making more and more revenue since this virus started. Again, the loan does not mean their stock is worth buying or their stock price go higher. But again, it's got beaten up because they're one of the Chinese stocks. So now it's turning around. So the opportunity here is to look on the bullish side. And you can look at the stock index too. There's a stock index. If you want to know about that, join my Patreon. There's several Chinese stocks I'm looking at as adding them to my watch list and looking for trade ideas. So this is something I'm considering, and I'm going to put a little label here. And this is something to watch. Right there. There we go. Oh, let's move this up a little bit more. So we come back next time and find out.